Tiech, Portfolio Manager at Avenue Investment Management. Bryden, good morning, and thanks for being here.
Thanks for having me, Paul.
So what's your take on the, let's start with the U.S. Those are the potentially market-moving numbers. What do you think, what do you expect there, and how sensitive is the market now to a surprise?
Yeah, I think as you highlighted off the top, I think the uncertainty that tariffs are causing, I think is now going to start permeating throughout the economy. And I think obviously the February numbers for the employment today will be too early for that to be showing through. But I think, the sentiment is definitely growing among the business community about just the overall uncertainty and this sort of tariffs one day, the next day there's an exemption for some sector, and then they're back on the next day. Like, it's just a crazy environment to be operating a business where you're making any kind of capital spending. So as we talked about when I was on with you last, I think the market, I would say, has digested the tariffs relatively well, but what's going to now feed through into the economy is this sort of slow uncertainty, and I don't think that is going to change anytime soon. And so I think the numbers today will be, obviously they'll be insightful to how the economy started the year. But I think, 1, 2, 3, 4 months from now, I think you're going to start to see probably some weakening in the employment numbers. And I think then that starts to feed through into, recession becomes much more of a central focus, I think.
And that's a U.S. recession, you think, is becoming more likely, do you?
Well, I think Canada is probably 2 steps ahead.
Right.
And I think the U.S., because, part of it, as you also highlighted, the U.S. has been really supported by a lot of fiscal spending. So as that fiscal spending starts to come off, that will definitely be a headwind for U.S. growth. But, we definitely don't try to predict or call months of recessions, but the economy is slowing, uncertainty is high. I think the business community is likely to react to the uncertainty with, a slower pace of hiring, and you're kind of slow walking into the beginning of a recession here. And, is that in 6 months or 9 months or 12 months? Like, we don't really care about that. But the direction is obviously heading in that way. And it's pretty clear that all of this tariff news is just adding to the uncertainty.
Here is a look at job cuts as measured by the Challenger agency. U.S. layoffs now at the highest level since 2020. You can see that uptick at the far right-hand side of the line. The huge uptick, of course, in the center of the graph is the pandemic period. So we have seen recently an uptick in U.S. layoffs, correct?
Yeah, so this was out earlier this week, and I think this is a headline that caught people's attention relative to the state of the job market. And so, an increase in Challenger job layoffs is obviously pretty clear what you would see at the front end of a recession. I mean, the employment market in the U.S. and Canada has been pretty strong, I think relative to what expectations were a year or two ago. And so the pace of growth in jobs is slowing as it is. But I think when you start to see headlines like that or rising layoffs, then obviously those are the kind of decisions that then feed into the business community, which then, the labor market starts to feed on itself. But that's sort of what we would expect at the front end of a slowdown in employment, and it's now here.
Those numbers, by the way, were measured in thousands on the vertical scale of that graph. The most recent number looks like it's around 135, 140,000 layoffs measured by Challenger. There we see that graph again. Yeah. What is your view then, Bryden, of the stock market if you think a recession, and particularly a U.S. recession, is becoming more likely?
Yeah, I think, it's interesting. I mean, when you're looking at the market every day, you can you sort of get some of these signals a little bit earlier, you get the feel of it, but we're clearly in some kind of a topping here. And if you look at the NASDAQ, if you look at the S&P, TSX has been relatively strong, and so is the Dow, but the U.S. market broadly is now back to levels we were 4 or 5 months ago. I think the NASDAQ is back to where it was in July. So when you're into this sort of a slow topping, and you've got the economy slowing, uncertainty is high, this is what a topping feels like. And even on these days where the market's been down, the next day it tries to rally, can't quite get there. And it's sort of like, being in the ocean and slowly being pulled out by the tide. Yeah. And I think that you're starting to see that. And as the economic data catches up, we expect the market to be, definitely more challenging this year than it was in the last couple of years. Some businesses and sectors can do well, but I think the general uncertainty, is here to stay. And I think it would be a mistake to look at the relative durability of the market in the last month or two relative to how people expected the trade war to happen and markets to plunge down. We didn't get that.
Yeah.
But we're clearly in some kind of a topping here, and so I think investors have to be thinking about sort of being cautious for, until some of this starts to be resolved, and I don't think that will be anytime soon.
Let's finish this conversation with your views on the Canadian stock market. The TSX Composite has outperformed the U.S. indices so far this year. It's down now on the year, but not nearly by as much as the U.S. markets are.
Yeah, so it's done well. If you look at the banks, they're in good shape. Really in good shape, but they're starting to come off. Energy stocks have done really well. I think the concerns that OPEC is now going to raise production. I think you've seen some of the air come out of those stocks in the last little bit. But really, the star of the year so far has been gold, and the gold sector is doing really well, and that's material sector is helping Canada. But I think Canada tends to do well into these sort of early pre-recessionary periods because you still have the stability of some of our core sectors that have held in well. But I still think we're still into this beginning of a downdraft. And I don't think that Canada will be spared from that.
That's Bryden Tiech. Remember, Bryden will take your questions at the end of this show in about 40 minutes from now on North American equities. Up next, Bryden.